Hello, and welcome to my channel. Recently, a friend was asking me about buying her first home and the steps that she needs to take in order to do so. This reminded me of my process that I went through buying my first home, all the mistakes I made along the way, and all the lessons I learned. So I thought I'd share my 5 top tips that will help you buy your first home in 2024. I've purchased and sold 3 properties in my lifetime so far. My first property I bought in the fall of 2020 and sold it early 2022. I then moved to a farmhouse north of the city, which I didn't like. I was only there for 6 months before I sold that, and I moved into my current house where I am now. Tip number 1 is to get a house inspection. A home inspection will look at all aspects of a home. This will include your walls, ceilings, floors, windows, electrical system, roof, drains, HVAC, plumbing, and so much more. For example, when looking at plumbing, the inspector will test all taps, appliances, including your dishwasher, your laundry, water softener, water heater, and make sure that everything is running properly. Any deficiencies will note in a house inspection report that then you can look at and use as a tool to decide whether you want to proceed with the purchase. When the house inspection is complete, he'll provide a written report stating all the things that passed and all the deficiencies on the home. Alternatively, you can download and conduct the house inspection yourself. I do not recommend this, as this is your first time buying a home. You are not aware of everything that you need to look at and conduct the review properly. You're best to just hire this out and get a professional look at it. Keep in mind that a professional house inspection is not held liable if something is to break after you move in. If they say that everything is functioning properly with the plumbing system and then a pipe bursts, they are under no liability to fix this. When I bought my first home, I thought I knew what I was looking at, so I decided to conduct the house inspection myself. I work as an electrical engineer in the construction industry, and I'm often on site reviewing construction installations to make sure that they meet drawings, code, and spec. I thought I knew what I was looking at, and I was very wrong. Shortly after I moved in, I found out that the plumbing had been sort of jerry-rigged together through many different contractors over the years that the house had been there. The house is over 100 years old, and when the washer ran, all the water from the washer drain bubbled up into the sink upstairs. Also, the toilet plumbing, being all original cast iron from when the house was built in 1906, clogged, and the toilet did not flush very well. This was a costly repair, hiring a plumber to come in and replace it, and a cost that I wish I had been aware of before I moved in. A house inspection would have helped me, and I think a house inspection would help you. Suggestion number 2 is to go in with conditions. Conditions are things that you can put on your offer that must be waived within a certain amount of time in order for the offer to be complete. You can use conditions to get out of a purchase and sale. They are there to protect you as a buyer and also the seller. The most common conditions used here in Canada are financing and home inspections. Other conditions are cleanliness, number of visits, new mortgage, tenants, repairs, escape clause, sale of personal property, and status certificates. Note that this last one only applies to condominiums. First condition mentioned was financing. Financing you can use to get out of a deal if you are not pre-approved for a mortgage on that property. For example, you offer $400,000 for a property that was built in 1850. The bank determines that property is only worth $250,000, and you are now on the hook for $150,000 additionally. If you have the condition of financing, you can use that condition to pull out of that deal with no repercussions. If you didn't have that condition in your offer and you had to cancel that deal, legal action could be taken against you. Often realtors will put additional conditions such as cleanliness and number of visits in their offer, which allows you as the buyer to go in extra during the closing period. So usually you'll have 2 or 3 visits. So the first visit you could go and measure for furniture. The second visit you could go and see how the packing is going, making sure that they're cleaning up the house and getting it ready for you. And the final visit you could use to go review and make sure that they've completely emptied the house, that the appliances are all still there, assuming you writ them into your offer. The curtains are still there, light fixtures are still there, they haven't removed things that they weren't supposed to from the property. Another important condition is tenants. If the house is currently tenanted, you might want them out, or you might be buying the property to keep them in. You need to know that, and that needs to be written into the offer. Another condition is repairs. Are there any repairs that need to be made to the property? Major roof leaks, structural issues, eaves troughs falling off. You can write all this into your offer and have the seller make these repairs prior to closing. Status certificates. They are a document that contains essential information about the condo core and the board. These include the financial situation of the condo core itself and any possible condo fee increases that you may have to pay in the upcoming years. When I bought my first home, it was a very hot market. Most people were going in with little to no conditions. The bare bones were usually financing or a house inspection. If you chose to do a house inspection, you were best doing that before you ended up putting in the offer during the listing period so that you could get in ahead and not have that as one of your conditions. Luckily, I included a financing condition in the first offer that I made. This saved me a ton of money because I ended up getting stuck in a bidding war. The price kept going up and up and up, and it got to a point where I couldn't afford it. Me not realizing that the mortgage insurance, which I had to pay because I was less than 20% down on the property, was also included in the amount I was pre-qualified for. So I thought I had a little bit more wiggle room than I actually did, and it ended up being above $10,000 above what I could afford. Luckily, I had included a financing clause in my conditions, and I was able to get out of that offer. The third point is your mortgage type. Now, your broker should be able to walk you through the different types of mortgages that are available in your country. In Canada, the two main types are fixed and variable rate. A fixed interest rate is just like it sounds. There's a fixed interest rate for the entire duration of the term. That's usually either 1, 2, 3, 4, or even 5-year terms. During that 5 years, you will pay the exact same amount in interest every month on top of your principal payment. Variable rate mortgages change interest rate based on the prime interest rate. If the prime interest rate goes up, then your variable rate mortgage will go up. If the prime interest rate goes down, then the variable rate interest rate will go down. Different financial institutions offer slightly different variable rate mortgages, but all those will hover around the prime mark. Do your own research, contact your broker, and find out what the lowest variable rate mortgage is available to you. In the US, there are several other types of different mortgages. The common ones are conventional mortgages, jumbo mortgages. These are for expensive properties, usually in the $1 million plus range. Government insured mortgages, FHA loans, USSDA loans, and VA loans. But your mortgage broker is the best person to ask on what loan is right for you. Do your own research and find out what is available in your area. What I did. I chose a fixed rate mortgage. At the time, mortgage rates were really low due to the pandemic, so I was able to lock in at 1.75% for 5 years. A year and a half after buying the house, I had an opportunity to switch companies for a pay raise and to live closer to family and friends. That means I had to sell my house and buy a new property where I was moving to. Because I was locked in at a fixed rate mortgage, I had to pay a penalty in order to get out of that mortgage for the sale of the property. What I didn't realize was that penalty would be so high. That penalty ended up being in the 5-digit range, just over $10,000. Luckily, I made a lot of money on the sale of the property, so this wasn't a big deal. If the market had fallen in that time, I would have lost money. A variable rate mortgage would have been better for me at the time. The penalty for breaking a variable rate mortgage is usually only 3 months worth of interest. So in my case, that would have been around $1,800, much less than the $10,000 that I had to pay. The fourth tip that I have is with your offer. Your best starting point is with your realtor. You want a realtor that's familiar with the area and that can advise you on the best possible price to offer for the home you're thinking of buying. They do this by looking at recent sales in the area and similar properties. They're not going to compare a 3-bedroom, 2-bath home to a 6-bedroom, 4.5-bath home. You will not get an accurate price representation from that. They're going to pull up a list of recent 3-bed, 2-bathroom homes in the area and use that as their starting point for your offer. You can do this yourself through free apps like House Sigma, where you can view sales in the area. All you need to do is create a free account, and then you can get access to most of the information that is available to the realtors. My advice is to set a range for the property. Figure out what your low point is and what your high point is, and start your offer at your low point. If they write back with an increase, then you can adjust your offer based off of what you think it will sell for and what is a fair value for that property. Don't fall in love with a property. There are lots of properties out there and you will find the right one for you within the price range that you want to pay. The current market is pretty slow. Interest rates are a lot higher, and there's a lot less bidding going on properties. When interest rates were really low, there was a lot of bidding wars going on where 5, 10, 15 buyers would all be putting in offers at once. Realtors were holding offers until a certain time and then asking people based on the number of offers if they wanted to increase it. Try not to get sucked into a bidding war. Sometimes it is unavoidable, but just set that minimum, set that maximum, and work within that range based off of what the situation calls for. Again, a good realtor should be able to advise you the best possible route forward. The first time I offered on my first home, I was sucked into a bidding war. There were 5 other people that had also submitted offers, and you don't know what those offers are. I was golfing and trying to adjust my offer from the golf course in a pretty high stress environment. My realtor kept calling me saying that I was close to somebody else, and this was from the selling realtor, and that I could adjust my offer if I wanted. I ended up adjusting my offer twice and going above what I was pre-qualified for. Luckily, I did go in with a condition, so I was able to pull out of that offer when I didn't get financing. Even luckier, the house ended up sitting on the market for a long period of time, and then I was able to go in and offer again at the price that I was willing to pay. Again, I went in with the conditioning of financing just in case, but this time everything went smoothly, and I was able to waive that condition when my financing came through. The final thing that I want to mention is unexpected expenses. There'll be a few unexpected expenses that come up during the purchase of your first home. For example, an appraisal will cost you around $500. Most lenders require an appraisal in order to get approved for the mortgage. This will have a licensed appraiser go out, look at the property, and make sure that it's worth what you offered. Then the bank doesn't get stuck with a property that's worth way less if you ended up foreclosing on the property. Another thing that can add up quick is house inspections, which were mentioned earlier. In a hot market, you may need to conduct the house inspections before making the offer. A couple $100 here, a couple $100 there, a couple $100 here, and that can add up very quickly. So in a hot market, just be aware of that. Right now the market is fairly slow, so you should be only making offers with house inspections as a condition. Another thing is legal fees. It costs about $500 to $1,000 to draw up the paperwork, and another $500 to $1,000 for all the additional legal fees that are stacked onto that. Things like paper, copies, paper clips. You get charged for everything from a lawyer. Another thing is land transfer tax. In Ontario, there's a land transfer tax credit, which is around $4,000, that offsets some of that. Most properties now you're paying more than that in land transfer tax because the properties are much higher than what they were 5, 10, 15 years ago. Another thing that can add up is mortgage default insurance. If you're less than 20% down payment, lenders require that you pay mortgage default insurance. This varies based on your down payment. For me, I was a 10% down payment, and my mortgage default insurance was in the $10,000 range. This just gets added on to your loan amount and split up amongst your monthly payments for the first term of your mortgage. Other things are title and home insurance, utilities, property tax. All of that has to be paid for your move-in date. Your realtor can walk you through and provide estimates for these in your area. Also, most realtor websites, such as realtor.ca, realtor.com in the States, have estimations on there based on the area and a specific property that you're interested in. I had a few minor costs that I didn't account for, so I got pretty lucky here. The appraisal for my first property was only $300, and then there were basic household items such as shower mats, shower curtains, etc. that I just didn't even think about. I was moving from an apartment with a corner shower, so it didn't need a shower curtain, and I didn't have one to bring with me. But these are little things. The big thing for me was the furniture. I had a 1-bedroom apartment, I had a bed, I had a couch, desk, table. But when you get that into a whole house, there's a lot of empty space. So I was missing quite a bit of furniture that I had to pick up over time. Stuff like barbecue, patio furniture, chairs, tables, couches, side tables, etc. So in summary, the 5 things I learned were: get a house inspection. It can help to prioritize what you need to do first and what can be put off. Go in with conditions. These will depend on the market, what you're comfortable with, and what the realtor recommends. Research the different mortgage types and pick the best one that's available to you. Your broker should be able to advise you in this regard. Try not to get stuck in bidding wars, that hated word. And finally, try and plan for the unexpected expenses that may arise. Thank you for watching. I hope you learned something. Do you agree with my list? Please leave a comment down below in the description.